darkness. All right, folks, it is This Week in Crypto time here on April 8th, 2022. Hope you're all well. We've got a lot to cover after Bitcoin and the crypto markets have not had a good 3 or 4 day stretch here. The week started off well, at least going into the weekend, but by Tuesday, Wednesday-ish, wherever you're living, that's when we started to see some price declines happening rather rapidly. And now we're sitting at many altcoins back to where they were a couple of weeks ago. We see Waves, one of the biggest loser of the top 100, dropping 48% after being up something like 200% during the week last week when we covered everything. So things have turned on its head, as things often do in crypto. And we're going to try to get to the bottom of exactly why it's happened and what we should be looking out for as we prepare for mid-April. Obviously, we have a rumored FOMC, another adjustment that will happen that is likely going to impact prices either positively or negatively. We also, of course, have the halfway point to the next halvening, which one of our community members did a great job covering. And this is historically a time where prices decline a bit, but that's of course based on a small sample size of just a couple other times. So we'll cover a lot. As many of you know by now, anything we cover on this channel during our This Week in Crypto calls should not be taken as investment advice. What we try to do here is simply give as much historical evidence to what things have looked at in the past versus what things look like now, and how we can compare those divergences based on what is the most likely occurrence that's going to come next. So appreciate you all understanding that. Obviously, we have Bitcoin here dropping about 5.5%, Ethereum 3.5% down to 3,200. Bitcoin last got below 43K. I believe this was something like, yeah, so we're looking at just over 2 weeks ago, the last time we were back here, which it feels like a lot longer, to be honest, with as much euphoria that was going on here and people talking about how we're going to regain, potentially 45K, and even we did regain 45K and potentially would go to even 50K. But there's not as much optimism on this dip as I expected, and we'll touch on that later. But for now, just to go over a few anomalies on the top 100, we see that NEAR was able to be up 37%, Convex 22%, Mina 21% on the positive side. On the negative side, we touched on Waves. We also saw Zilliqa really decline fast. Waves and Zilliqa were not so coincidentally the two that were really thriving last week. So they are the ones who've been hit the hardest on this retrace. We also see Chainbing, which had been on a great run. So these are more mathematical pullbacks than anything else. We can see that the majority of these altcoins, maybe about half, declined at least 10%. I see many that declined over 20%. So this was not a fun week for the altcoin holders. All right. So we're going to jump into some Bitcoin metrics. For those of you who joined us yesterday for the Discord webinar, thank you so much. I really hope you enjoyed it. Because we touched on so much Bitcoin yesterday, we'll keep it a little lighter this time around and try to have an expanded session to go over altcoins and some other topics that maybe we don't normally hit on. Before we go into the usual Bitcoin metrics, I wanted to start off with one of our newest metrics known as the ratio of daily on-chain transaction volume in profit to loss. So this is measuring how many transactions are happening while that Bitcoin is in an address that is in profit versus the time that it arrived there, versus a loss versus the time that it arrived there. The higher the bar is, the more, the greater the ratio is of transactions happening while people have made money essentially through that Bitcoin that was sitting in their address. And when it's lower, it means they're capitulating and selling at a loss. Now we have both Bitcoin here in blue and Ethereum in yellow. And Bitcoin is it is having, as of the last full day, the 8th, or sorry, yeah, this is the 7th and the 8th really combined right now. But we're seeing a consistent large ratio right now, which is not the greatest thing in the world considering the prices are retracing. That means that, you know, people who bought back here, they're selling now on this dip, but they're still in profit, meaning there's a higher likelihood of a further dip based on just this metric than there would be a bounce. Typically, you want to see something, obviously this was the highest one. So you want to avoid, you know, selling off when you're way up here, and you want to buy when you see this kind of dip. And when we see it, this gives you some leading time to watch what the ratio is, and it typically reacts at the end of that day. So in this case, on the 31st, we saw a perfect drop in the ratio and then a nice bounce right afterwards. Same with here, actually. We saw a drop, and then at least temporarily, we saw a nice rise. It wasn't a big one, but between the 6th and the 8th, we did see about, what is that? Oh, it's not giving me the percentage because I'm on candles. Let me switch to line. Yeah, so it was just like a 1 to 1.5% gain, which isn't much, but the whole point is you want to be buying when others are transacting while at a loss. And we saw that typically in mid-March. There was a lot of that going on. You see here on the 9th, 10th, 13th, 12th, and 13th, we saw these big dips in both Bitcoin and Ethereum's ratio of transactions and profit to loss. And what do you know? The price takes off after this last one, going up somewhat about 23.5% over the following 2 weeks. So obviously this is one of many metrics, but it's one I'm really excited about, and I'm actively working on this model here, which I introduced to some people yesterday. And what it does is it essentially measures which assets are seeing the highest ratio versus the lowest ratio on that metric. So we can see phantom, major dip, meaning a lot of people are selling at a loss right now. Meanwhile, Huobi token, Litecoin, XRP network, Hex, USD coin, interestingly, I'm still quite interested in stable coins having big spikes in profit to loss or loss to profit. It may not mean much, but I think there could be some hinting there whenever there is a big accumulation or big drop off in stable coins. But yeah, I'll have more on this soon, and we'll all be able to look at things together. If you have Sandbase Pro, you can just log right into a model like this and check in on a day-to-day basis to see when there are big spikes for your favorite assets here. All right, so going back here, I'm now going to shift things over to our main metrics for Bitcoin. And starting off with circulation and daily active addresses, things have been relatively flat. The amount of unique tokens and unique addresses interacting on the network have mostly stayed stable. So not much to say there right now. We won't spend too much time on that one. MVRV I do find quite interesting right now. So full screen is still down. What we're seeing is a large dip that is essentially matching what we saw in the 6th, where the MVRV is now around negative 3.5%. And this is a modest dip. Like, we can easily go down to, you know, the negative 6 to negative 10% range if things continue declining today and going into the weekend. If we want to really see a juicy opportunity, that's where we'll want to look at something like plus 15% or minus 15%. So I'm backing out here so we can see that in more context. Let's go to the last 6 months. So here is what I'm talking about. We saw this opportunity zone back in mid-January as well as early December. And in both cases, prices did rise shortly after. This one was short lasting. This one was the beginning of a really nice rise where the price didn't match. The price still has not gotten this low since the MVRV went below negative 15%. So that's interesting to see. And of course, on the high side, which we didn't get to recently and haven't seen in quite a while, that would be right here. So the last time we actually saw an MVRV above this danger zone was way, way back in October. But that doesn't always mean that you just shouldn't take any profit, right? If you're getting near that zone, it's certainly justified to de-risk yourself in ways that will make you comfortable should the price start to turn downwards. And it got there twice. It got very close, I should say, twice, where it was above 10%, but not above 15%. And you see that big price retraces happened both times. So MVRV continues to be a very important metric to look at. Obviously, right now at negative 3.5%. There is a slight less risky opportunity to get into Bitcoin. So that is a nice thing to say. We will have to look at how other fundamentals look along with MVRV. We obviously already looked at the transactions ratio to see that it isn't a great time according to that metric, but we still have whales. We have some other, social metrics to look at. Dominance is going to be an important one, and we'll zoom through all those really quick so we have plenty of time for altcoins. We'll do a little extended session on Ethereum while we take a poll. And Max, if you want to see what kind of recommendations are coming in, literally in about 10 minutes, we can spend like a good half hour on user requested assets this time. All right, weighted sentiment, also very important right now. We have been quite negative for quite some time, and this is a good thing. As many of you know, prices tend to move the direction of crowd least expectation. And right now, being in our fourth straight week right now, just a few days into it, in negative territory, it's a good sign, meaning that people, even on this climb here, were expecting that prices were going to retrace. And now that they finally are, we're not really seeing much enthusiasm to just buy the dip. And this is the big price point where we should all jump in. That increases the chance of this being the price point to jump in, because we're actually seeing that weighted sentiment continue to scale downward. It's not just staying in one place. It's actually getting more and more negative because they were already doubting it on the way up. You better believe they're still doubting it on the way down, especially because it's still well above where the price was when they started doubting it. I think this is one of the most bullish metrics that I see right now. Obviously, this is conflicting with, the transactions ratio and a little bit on the whale side when we get to those metrics as well. But overall, I think at least for the short term, as long as you see people so emphatic that Bitcoin is priced too high right now, you can feel confident that the price will not absolutely drop off a cliff, because it wouldn't be shocking enough to the crowd. It might continue to bleed slowly, but I don't see, because of weighted sentiment already being so negative, I don't see things really dropping off rapidly over the weekend. And obviously not investment advice. I've seen more surprising things happen, but combine this metric with the supply on exchanges being as low as it is right now. Let's go look at the last year for context. This implies, this lowered ratio on exchanges implies that there is a smaller likelihood of a massive sell-off occurring, because there is simply less Bitcoin available to sell on exchanges. So it's much more likely back here in mid-May to see sell-offs happening, because we're looking at 4% more Bitcoin sitting on exchanges than there are now. That said, since March 30th or so, we have seen an increase of supply in exchanges of about, looks like plus, about 1.5% rise. So there is a slight trend upwards, which is pretty rare over the last year. We did see one here in mid-July. We saw, very minor ones in mid-February. But overall, I mean, you can see quite clearly that the overall supply is still showing a propensity to move off much more than come back onto exchanges. So this is a pretty small blip in the radar compared to just how much of the supply has moved off over the past year here. So I'd call this a good sign for Bitcoin as well, and a further reason why, if there is going to be a continued decline in Bitcoin's price, it's probably going to come more gradually than a very rapid one. So obviously keep in mind that fundamental events can change that. The FOMC can put another hammer down on interest rates, and we've seen, I'll get to that in a moment, but Ethereum especially and the S&P 500 are tightly correlated right now, but Bitcoin is still correlated as well. And if you see, the S&P continue to drop off, that can hurt crypto. Another COVID outbreak, I really hope that doesn't happen. That can affect crypto. New developments in the Ukraine and Russia war, that can absolutely hurt crypto as well. Okay, now let's look at Whales. As I mentioned earlier, we'll take a look at just the 100 to 10,000 coin addresses. Let me save this template as well, because that's usually the one I look at. So this is the last year of the percentage holdings from Whales that we pay the closest attention to in Bitcoin. Typically, the 100 to 10,000 tier is about as high as things get before we're looking at mostly just exchange addresses. And that's not really going to provide us the alpha we're looking for. So we stick to the highest end actual human traders who are reacting to all of the market fluctuations in real time and deciding whether they want to add more or less. Right now, they're continuing to show that they want less. They've been dumping for about 5.5 months now. That's a very long stretch, considering if we go down to back to 2020, considering the fact that the long-term line here has still shown a pretty steady pattern of accumulation for a long time. We had this big dump off here right before the first all-time high of last year in April, but that quickly resumed to an accumulation again, and you saw that eventually the price ended up following it. They started taking profit between the October all-time high and then the November true all-time high that still stands today. They held a peak of about 49.5% and have dropped to about now below 48% for the first time since around December 2020. So that's a 16-month low as far as the supply held by these key stakeholders in Bitcoin right now.
And Brian, one more thing. I know from some sources, also from the data we're following, it increased in the last 6 months. Those fall into the category old wallets from 2012, 13, I think yesterday even from 2009, very early. They're moving their coins. And of course, for them, it's a typical size, exactly this, 100 Bitcoins and more, for whatever it means. It's a kind of increasing movement of really old coins, almost 10 years old, or like 8 years old. And I was thinking about a little bit, could have two meanings. Short term, yeah, it's not good. But long term, if they think, okay, that's it, we've made the top for Bitcoin. And obviously they think differently, yeah. Because they're facing, like, I don't know, very big, substantial amount of money. So maybe it's a good indeed sentiment we're looking for. But yeah, if they keep moving, they keep selling, there is a constant pressure. And it's all question, these institutions, or be it even lately, Terra Foundation buying Bitcoin. Yeah, they put the buy pressure, but here's the sell pressure. Yeah, it's an interesting topic to consider, but all coins being moved, it means something. Yeah, I still haven't come up with what exactly it might mean, but they're moving.
Yeah.
They're moving. Most likely they're saying it, yeah.
I'm curious whether there's a mean dollar invested age spike here.
Probably. Well, it's it's not so huge amount of. It's just the fact that they're old. You would probably see some jumps on age consumed, but again, on the scale of the whole Bitcoin network, not sure you will notice it.
Yeah, it looks to be pretty much the same run-of-the-mill rising climb right now in terms of the average age of the dollars invested in Bitcoin. So it isn't showing too much on this metric, but that is very interesting.
Yeah, it's just a few hundreds here and there.
Yeah,
could be that someone who is accumulating Bitcoin, they prefer very clean all time, no bad history Bitcoins. They might be paying even additional money to get such clean Bitcoins from all time. Yeah, possible.
Yeah, and I posted this yesterday. It's the amount of whale transactions hour by hour over the past week, and we did see that at the local bottom just yesterday. This was maybe 16 to 18 hours ago. We had the largest spike of the past week occur with 1,146 transactions valued at over $100,000. So there's very likely a correlation between some of the whale moves that Maxim's referring to, and this spike in particular as well. Typically, these are volatility indicators, and they will. The larger they are, the more likely they are to indicate that a price direction change is happening. This one, of course, was a very short-term and temporary one, but we did see around I think a 1.5%, 2% rise right after this happened. I think it was definitely more like 1.5%. But regardless, if we continue to see larger rises in whale transactions, that's going to be an indication that whales are interested in this move down below 43K for the first time in a couple of weeks. And that would be a good thing because whales tend to wake up and do the most when there's volatility and big moves moving in either the positive or negative direction. Right now, we're in a negative direction channel, and we've been in it for quite a while. If we go back to really the all-time high in mid-November, we're coming up on 5 months since that's happened. And I think that whales are going to eventually, they have some price in mind where they're going to start accumulating again, but we're just not there yet, especially because we're still above the last low that occurred just a few days back. So if we break below, let's say, this is arbitrary. I mean, 40K is the obvious psychological support level or resistance level. If we went below that, we would definitely want to monitor more closely what those whales are doing. Right now, I still think that based on this behavior that I'm seeing, it doesn't appear that they're too interested in jumping back in based on the 42K, 43K range. That said, there can still be other factors that push the price up. It doesn't have to be solely reliant on whales. We saw, a pretty big bounce here, for example, and even back, like in mid-March after the post-war fear recovery that happened here, we saw a pretty big rise without the whales really doing much. So that's a strong sign that there's more and more impact happening from retail investors and others who are in tandem being able to push up the price without the 100 to 10,000 coin addresses being involved. All right, exchange flow balance is showing a little bit of interesting stuff right now. It's started to show some major inflows. So obviously this will match up with this right here showing that more of the supply is moving back onto exchanges, not a ton, but enough to for us to take notice. I would call this very mildly bearish because we're seeing just in these past 2 days more coins. It looks like a total, if I add up these two, 5409 plus 11420. So we're talking about somewhere around 16,830 coins moving onto exchanges in the last couple of days. That's a pretty big spike. And typically these inflow spikes will be more indicative of retraces. If we look at some of the largest ones, this one here, these were happening as prices were declining. This one here was right after the local top on October 20th. And then we want to be looking for the big negative exchange flow balance spikes that occurred on February 1st and March 10th. In both cases, they perfectly demonstrate how prices will rise shortly after. Typically, the larger the spike, the more confident that the price will move in the expected direction. This was a pretty good leading indicator as well, even this one here. So right now, we're seeing a pretty modest, mid-sized inflow spike for the last couple of days, and I'd be wary of that as well. I am giving a lot more bearish divergences right now, but I promise there are some bullish ones. One thing that I skipped over when we talked about circulation is our NVT model. And here we can see that for the past 7 months, including this one, we've been in a semi-bullish or now bullish divergence on the NVT model. So this is indicating that even though circulation has been pretty stagnant and not really moving up or down, that's not the worst thing in the world, because if it hasn't moved since the all-time high, that means utility is staying where it was, even though prices have declined. And that is why this model, which measures the prices versus market cap, is now showing that we're now in bullish territory because circulation has stayed at the same level, but prices have fallen. And that would be a good thing. Obviously, we'd like to see circulation actually increasing while prices are dropping and not just staying flat. But regardless, it's been enough for at least through the first week of data that's come in for Bitcoin to have this model show it as a bullish indicator or a bullish divergence. So that's a very good sign to go along with a lot of this doom and gloom that we're talking about. Another good sign is the fact that buy the dip mentions are relatively low right now. You would expect, coming, it looks like, like the last 9 days or so, going from 48K down to below 43K, you'd expect people to be pretty emphatic that it's time to buy the dip. And they were briefly talking about it right here at the very beginning of the dip. But as the actual big dip started to get underway, look at how the mentions have actually declined and now are pretty much back to neutral territory, just like when there isn't a dip going on. So that's a sign that, just as we saw with the weighted sentiment being so negative, it's a sign that traders don't really believe that things are going to pop right back up. And they're pretty weary of the price right now, whether it be due to news, the upcoming FOMC event, the halfway point of the halvening. It could be for a lot of reasons, but we're definitely not seeing any huge spikes like this or huge spikes like this, like we saw, earlier in 2022. So I would call that a good sign, considering how much the crowd doesn't believe in Bitcoin at the moment. I think we can conclude Bitcoin there. I'm going to start looking at a few Ethereum metrics, and while I do so, Max, if you want to organize some of the altcoin requests, we can start tapping into those in about 5 to 10 minutes. All right, so on the circulation side, it isn't looking quite as good for Ethereum. We do see that it's been a very mild decline here, pretty much since mid-June. There's just been a very gradual drop in the amount of unique Ethereum moving on the network on a day-to-day basis. The average day, we see around 760,000 Ethereum moved. That's a far cry from when things were peaking at about 1.84 million, 1.85 million, which is more than double back in early June. Even back in like early July, we were seeing right around 1 million Ethereum moving per day. So we're about 25% below that right now. And it's something to be mindful of. Utility is drying up a tiny bit for Ethereum, maybe more like a decent bit, not so much a tiny bit. So be wary of that, and know that the amount of utility is dropping rather than rising right now. It could be due to fees. If we look at fees really quick, I know that this is always something that is on Ethereum traders' minds, but you can't really blame it because you can see that it's dropped off considerably. It really bottomed out at just $3 a transaction on March 11th, and it has risen a bit, but still, relatively speaking, about $7.90 per transaction isn't bad at all, considering, you know, we see peaks at like 62.85, 57.52, 69.57. These are massive transaction fees that obviously we can see correlate with price tops in most cases. And it's something to be mindful of when you're thinking about utility and whether that's correlating with, you know, price tops, price bottoms. Right now, it doesn't look like fees are a blocker for traders because they're relatively low. And also note that there is a little bit of an alpha in terms of a bottom indicator for this metric as well. We can see that when fees really got to their lowest point, that's when we see the rises. Boom, even here recently in mid-March, when things were dropping to $3-4 per transaction, that's when we see the big rise. So, you know, you won't always see these extremes, but just like MVRV, the lower the fees are, the higher the confidence is that prices can rise and vice versa. Daily active addresses, not much to say. It's been wavering up and down a bit. The average amount of addresses interacting on the Ethereum network every day sits at about 524,000. It was peaked up at about 683,000. So neutral to slightly, very, very slightly bearish on the daily active address end. On the MVRV side, so this is interesting because Ethereum has mostly outperformed Bitcoin over the past month. The 30-day MVRV is actually still in positive territory despite Bitcoin being in negative territory. It's sitting at about 2.884%, so it's just slightly more risky than usual to enter into an Ethereum position right now, but this is relatively neutral, all things considered. We just want to avoid the plus 15% mark, which is way up here, and the negative 15% mark would be our huge opportunity zone, which is way down there. Mean dollar invested age, kind of the same situation as Bitcoin. It is showing a slight rise right now. It did see a dip in late March, which is interesting to see. This is when a lot of dormant tokens were moving. It only happened for a few days before this upward mean dollar invested age pattern resumed. But we'll want to continue to look for any sort of tapering off like we saw here right before the big dip that led to the huge rise way back in April and May of 2021. For now, not much we can really say, and this indicates there isn't too much dormant movement happening. Supply and exchanges is looking pretty good for Ethereum. We can go to, let's go last 3 years. So things were at their highest in March 2020. This was during like kind of the base of that price. The price, God, it's crazy to see that Ethereum was down at $110 just 2 years ago, considering people are now sad when prices are at $3,200. But regardless, we can see just how much the supply and exchanges have moved off of the Ethereum network since mid-March, going from about 27% down to 12.66%. So well more than half of the amount of Ethereum that were on exchanges back then are now in cold wallets, in DeFi, in other corners of crypto that don't have to do with being able to directly sell off Ethereum, which is a good sign to indicate that there can be a limited amount of future huge sell-offs happening. As for whales, Ethereum is always a bit of a tricky one to look at in terms of what key stakeholders are doing. I like to take a look at the 100K to 1 million holders, as well as, get rid of this pink line, as well as the 1 million to 10 million holders. And this, there was a reason for this. I'm not, maybe you know better than me, Maxim, but from my understanding, that this huge drop off is because the main ETH 2.0 address jumped up to the 10 million to infinity tier recently.
Yeah,
so,
makes sense. Makes sense.
Yes.
Makes sense.
So this was all due to that. And we saw immediately the...
Maybe you can combine these two addresses for the future. You can combine these both.
Yeah, exactly. I can just combine everything 100K and above just for simplicity. And that might help give a little bit of context here. This obviously includes a ton of exchange addresses, so take this with a grain of salt. But overall, the addresses that hold over 100,000 Ethereum have climbed up quite a bit over the past 3 years. We do see that over the past month, or at least 4 weeks or so, there has been a decline of the amount of supply held by these addresses, going from 44.7% down to 43.9%. So they've dropped about 0.8% of the Ethereum supply in just 4 weeks. That's quite a lot. And it does look like they did so beginning right at the price bottom. They started dropping as the price was rising. So that's a sign that there is some attention being paid to this rally and profit taking is being had. Exchange flow balance, not really much to say. Unlike Bitcoin, not really major inflows or outflows in either direction. Network profit loss, we did see this huge spike here that indicated that there is a lot of traders taking profit that matched up with the chart that we looked at earlier that showed the ratio of transactions taken in profit versus loss. So that was pretty close to the price top, as we know, and things have kind of flattened out ever since, sitting in that $3,200 to $3,300 range. We did see this one huge network realized profit loss spike here. And this wasn't a coincidence. This was just a couple days after Ethereum's all-time high of nearly 5,000, and prices have dropped off pretty massively ever since. Notice how this negative network realized profit loss spike happened near a bottom, and we did get a short rebound. So you want to look at these negative spikes. Even here, this one occurred right at the bottom way back on May 21st, and we saw a nice rise shortly after. But keep in mind, these can be very temporary. And they're kind of more swing trader spikes on this metric compared to some of the other metrics that we look at. Development activity has stayed pretty steady, but that's a good thing for Ethereum because Ethereum is getting well over 200 notable GitHub submissions every single day. And until that changes, we'll be pretty happy with development activity continuing to stay in this nice range here. Not much to say about social dominance. It's below 10% now, so a little lower than usual for Ethereum. It was getting a huge spike here when it was breaking away from, actually this was before, so I take it back. This was pre-war news, and I think it might have just been a small blip in the radar. But Ethereum did have a nice breakout away from Bitcoin for the second half of March and even like the first couple days of April. So there was a slight uptick in dominance, but it's come back down for now. We already talked about the ratio of profit to loss. Whale transaction count is staying down right now as well. We zoom in just to see if there were any anomalies. This was a very small one. This was the last really big spike, and notice how it occurred right at the bottom. I think if you're looking at whale activity for Ethereum, this whale transaction count of $100,000 transactions or above is probably your best metric to look at, simply because whales, the supply distribution for whales on Ethereum can be pretty dicey and hard to really extract a certain tier and say that that is the perfect key stakeholder tier to look for. But you can clearly see bottoms occurred right when this spike happened. Obviously, tons of accumulation was happening with these spikes as well. And even these here, like there were tons of Ethereum whale transactions happening on the dip here, which eventually panned out, at least for the short term, before obviously a further decline. But I would keep this metric in mind. I think it's a very valuable one for Ethereum and a lot of the assets that may not have very clear paths on the supply distribution metric here. All right, so we're 40 after. I think this is a good time for us to transition into some of the other altcoins. I'm glad you're here, Maxim. We can kind of tackle some together and you can lend your knowledge into what you see for a lot of these projects.
Yeah, I can give you a few interesting examples. The one was with Balancer, but let's skip it for the moment. It's a bit more complex to show. If you take Uniswap, Compound, and Aave, and place just two metrics, daily active addresses, 24 hours, and you can also play network growth. Yeah, take one, yeah, Uniswap, 24 hours. Yeah.
The one asset we had requested from chat is MATIC Polygon.
Okay, thanks, Max. So you said Uniswap, Compound, and what was the third one, Maxim?
Aave.
Aave. Okay, so I'll put all three of them on the same chart.
So the both, okay, it's not both, three of them showed one of our favorite setup for the Toppish setup, when the price was trying to press to the new high, and with Aave it succeeded, but network activity started to divergency appeared. So, you know, from me talking, it's one of my favorite ones. And actually, based on this, I even wait on Sanako for Sunset for Aave. So, but you need to show the price. Now you're showing price of Uni, so you can switch. Yeah.
For which asset should I switch to here?
You can take Aave. Aave will be more visible.
Oh, got it. So are you referring to this spike in daily active addresses, Maxim?
Yeah. They made a very strong increase in daily active addresses, many of the projects. But then, in an attempt to make a new all-time high, the network activity was, as you can see, much lower. And it's one of the setups. And if you take price of Aave, you will see it very clearly.
So you said the price of Aave?
Yes.
Got it. Actually, first, let me make sure to lock these. If you guys don't know, as long as you have the lock button on, you can switch between assets in just a click of the button, and none of these locked ones will change assets. So now we've moved over to the Aave price, and everything is still the same.
Exactly. So if you highlight now the active addresses for Aave, you will see so beautiful. Just mouse over.
Right here?
Yeah, you see it. The spike was quite healthy increase in network activity, but then the price made a new high and we could not follow up on the network activity anymore. It's one of the classic setups for the top. And it's a simple one. I mean, I generally don't think there is a one indicator or one algorithm which was always correct, but I like this one because it's a simple one and it's easy to check, and you can check for all your holdings frequently. And always there was also some announcement. So if you see the price is pushing up, but the network, new blood, new people willing to interact on the network is not increasing, it means simply put danger. But there is an explanation for it, why people are not moving things, why they're not trading or not selling, because they're convinced it will go higher. So they decrease the activity. And at the same time also, it means decreased activity of people intensively buying. But most important, people are not selling this new all-time high, which they were doing just recently before. So danger territory. And we just noticed it today when we were researching several projects, and there was a similar pattern across many DeFi tokens, maybe across other tokens too. But I pick up the three as we saw it in the three.
Yeah, really interesting stuff. Obviously, all three of these assets are closely related, being DeFi assets. But they're all kind of in that 30 to 70 ranked market cap range. Aave is the lowest of the three, as far as I remember. But regardless, their daily active addresses have all looked quite in tandem, and that spike that occurred right here at the turn of the month, as Maxim's referring to, this indicated that we were seeing a top at the time, and even though we made a higher high, the active addresses did not follow, and that indicated a rapid rise, a rapid drop off was in these assets' future. So really cool. Yeah, I love to see insights like this, and active addresses are always ones to keep an eye on, along with circulation, to show just the amount of raw utility that an asset is seeing at any given time.
Correct, yeah. Speculative activity, you can put it simply, combined with utility itself, yeah. In DeFi protocols also, you see utility of the token, but it's the most important part of it is simple. Yeah, and you learn quite a few things. You check it. I actually check it on my mobile. You know that we have mobile version of Santiment.
Right.
And it's easy. Always a few times a day, check here and there, and then you see something. Say, oh, wait a second. Let me pay more attention the moment you see this pattern start emerging.
Yeah, exactly. And looking at a few other like Aave metrics, which I would imagine Compound and Uniswap look quite similar, we're seeing that MVRV is back to neutral, which is a good thing. Obviously, as that big daily active address spike was happening, we saw like all of these altcoins, especially some of the primary DeFi altcoins, way up here at like plus 35, plus 40% MVRV. Obviously, way past this danger zone. And same here, when it rebounded, it got right back up to above 30% again. And then eventually we saw this huge expected decline according to this MVRV metric. All right, let me look at MATIC and we'll do a detailed dive on that one. And if we do get one more good ERC20 asset that we can look at, that would be fantastic. And we'll go a little bit past the hour today. All right, so active addresses for MATIC has looked to be declining for quite some time now. We look at the last 3 months, and it's been mostly a steady decline. We look at mid to late December, and we were seeing about 7. Let me get an indicator on so it's a little easier to navigate here. We'll do a 200-hour smooth moving average. So end of the year of 2021, we were getting about 7,400 active addresses. We're now down to 4,500. So that's pretty steep, guys. I would be a little concerned about the lack of utility that MATIC is seeing right now. We've seen a few occasional spikes that have mostly correlated with price tops here, here, here. These were all price tops. So in most cases, when you see these single 1 or 2 hour huge spikes in daily active addresses, that's a sign that you need to be worried. Occasionally it'll happen on a bottom, like right here, but in most cases, these spikes indicate a top is occurring, and they're going to happen when the price is rising. Let's see circulation here for a moment. Okay, let's zoom into the last month. Not much really happening. Let me check the NVT model really quick. I think I might have MATIC pre-programmed. It's not up right now. I'll give that just a minute and see if I can get it to reload. But as far as MATIC circulation goes, if we look at the trend over the last 6 months, it's moving a little bit down. This is the 30-day smooth moving average. So it peaked around mid-February and has dropped down to about 34.7 million MATIC moved per day. That's the lowest we've seen since mid-October. So also another not so great sign in terms of the utility for MATIC, but that's of course just one piece of the pie, and we've seen many assets be able to thrive despite a lack of utility, often spurned by whales or some other metrics. So as far as MVRV goes, we do see that there's a slight opportunity. This would be the big opportunity zone line, and we are down to about negative 5.5%. So we're about a little over a third of the way toward that huge opportunity zone. Right now, if you were to buy MATIC, you are at a smaller risk than usual. So that's a good sign. Yeah, I'll leave it at that for MVRV. Mean dollar invested age continues to rise. Dormant coins and investments continue to stay in their place. Not a great sign considering that this trend has been going on for about 2 months now. Supply and exchanges, we had a huge spike that occurred about 2 months ago, right at the time that the dormant tokens stopped being moved. You can see that line up perfectly. And it's been wavering a little bit ever since, but if we look at like the last year, yeah, we're around the high point that we were at a year ago. If we go back even further, like let's look at the last 3 years. So we're still in a much better position than we were when MATIC was still getting its legs back in 2019 and 2020. They still had over a quarter of the supply on exchanges back then in mid 2020. And now we're at about a little less than half of that, at about 11.7%. It did get down to about 7.5% though. So it would be great if we started to dip back to that region. That would indicate that there is much less risk of a sell-off happening. This is a very low percentage overall for an altcoin. Usually we'll see a higher percentage sitting on exchanges, but MATIC is used for many things away from exchanges. So I'm not surprised to see that it's had, at least since this point, it's had a nice drop in the amount sitting on exchanges. Overall, a pretty neutral sign because it's up in the short term, but down in the long term. All right, Whales is a pretty good leading indicator for MATIC. The price is sitting at about $1.52 right now. So we'd want to look at the range of 100,000 to 10 million. There's still going to be plenty of exchange addresses in the 1 to 10 million range, but overall, I think this is pretty good in terms of looking at the leading properties of MATIC's price. Full screen still no good. Hopefully we can get those devs to fix that soon. We do see that there's been a drop off. Let's zoom in a lot. So there's been a drop off as of 10 days ago. They were holding about 10.4% then. They're down to about 10% now, about a 0.4% decline in the supply. That is not a great sign, but overall, you know, we look at the accumulation that's been happening since mid-October. This is about the exact opposite of what Bitcoin looks like right now, where they've been declining their prices, so, or their holdings on the asset. So overall, this is actually a decent sign, considering the long-term effect is still one showing accumulation, but the short term, just in the last 10 days, indicates they have been taking, if you want to call it profit. I don't know if they're actually in profit or not, but they've definitely been declining in terms of their holdings for MATIC. I'm curious how this looks combined with the ratio of on-chain transaction volume and profit to loss. Zoom into the last month. Actually, I'll go to the template for this one. Get rid of Ethereum. I'm gonna unlock this. Oh, I know why. It says BTC, but this is actually MATIC. Yeah, it's just the name. I mean to do that. There we go. So yeah, this is MATIC's ratio of daily on-chain transaction volume in profit to loss over the past month. We can look at like the last 6 months for a little more context, maybe 3 months. And we see that the biggest spike did correlate with pretty much the local top. We did have one more higher high here, but it did eventually decline. If we look at, there we go, filled area. So that'll actually show us when we're in negative territory. The biggest drops didn't quite correlate with bounces. Well, I mean, this one did, and this one did. So yeah, there's definitely some nice alpha on both ends here. Today and yesterday, basically the last 24 hours, we're seeing a nice, not so nice rise again, because this is showing that there's still a lot of transactions taken in profit, whether that's, you know, people that bought back here or bought way back in 2021 when prices were a lot lower. Whatever the case is, we're still seeing a lot more spikes on the high side than the low side. And that's a bit of a bearish indicator, because there's a lot of profit being taken instead of capitulation where people are selling at a loss. So until that changes, I'm going to be a little bit worried until we start seeing a lot of these types of negative spikes occurring. Let's take a look at whale transactions as well. Doesn't look like there's a lot happening. Let's go to like a day at a time. Yeah, it's been mostly a pretty steady decline. Whales are becoming less and less interested in interacting on the MATIC network, at least for now. And we're pretty much at our 1-year low levels right now, with only about 124 whale transactions yesterday, 50 so far today, and we're a little over halfway through the day already. So
Brian,
it looks like, yeah.
If we're talking about MATIC, could we look into MATIC native token activity? Because
what's the metric called?
Maybe it's MATIC Polygon. No, not a metric. Is that you take a different token?
Got it. Polygon MATIC, the P-MATIC one?
Yeah, I think this will be the one. And then we try to analyze the network activity on Polygon network itself.
Yeah, let's check it out. So circulation has been declining a bit. Daily active addresses has been declining a lot. We don't have MVRV data for it. Weighted sentiment is positive, but it's a pretty small token, so take that with a grain of salt. Supply exchanges we don't have. Let's see if there's anything interesting with whale activity. 100,000 to 10 million. Not much. It does look like there's been a little bit of accumulation since mid-September, but it's been coming down for the past month. Network realized profit loss is pretty dormant. Dominance is up a little, but this is such a small number, it's pretty negligible. And then the ratio of on-chain transaction volume and profit to loss. We did see some pretty big spikes here right before the local top. We saw another one here back in December before the local top on Christmas. Switch this to, oh, I know. We'll go back to the template once again. Yeah, not much here. It looks like the ratio of transaction volume and profit to loss did go up here. The negative spike did correlate with the bottom here, and we saw a lot here as well. Right now, we did see the last big spike being a negative one on the 6th, so that's a good sign. But it's not enough for me to be super excited about, because it's back to pretty much neutral now. Whale transactions, let's check that out. Pretty low. Yeah, it's been sliding for a while now. Yeah, I don't see much here, Maxim. Are there any specific metrics you'd like me to check out?
No. I just mentioned it because I know we have two set of metrics, one taken from Ethereum blockchain and one taken from Polygon directly.
Mm-hmm.
So one was just when we analyze it, we can analyze both.
Yeah. No, good point. It's always good to look at the P version of the asset.
Yeah, actually, now I even think we could combine them, but it will take a little bit time of preparation. But we could make formulas which are combining both directive addresses and circulation, everything. But it takes some time, probably.
Yeah, no, that's a good idea. We can prepare that for the future. Why don't we take? Yeah, let's do one more.
Okay, let's take Immutable X, IMX.
IMX. All right, circulation quite dormant right now, extremely dormant, in fact, pretty much at the lowest point it's been in 2022. Daily active addresses also in that same spot, lowest in 2022 right now. Weighted sentiment neutral, nothing to say there. Supply and exchanges is showing an interesting story. The supply has been rising for at least the last 6 months. Let's go to the last year. So this is a very short, okay, it's only existed for about 6 months, 5 months or so. So supply and exchanges, this is pretty normal for a new asset. We'll initially start to see obviously no supply and exchanges, and eventually it'll begin to move onto exchanges. But because there hasn't been too much exciting price outbreaks in crypto for most of the year, relatively speaking, at least no major bull runs, I'm not surprised to see that it peaked at a little over 5%, and it's now starting to decline until there's like a crypto breakout, like really big breakout. We may not see the supply move far above 5%, and it's probably a good thing. We don't want to see, supply continuing to move up, and up as time goes on. If there's only 5% of the supply on exchanges, it's at a pretty low risk for seeing a major sell-off and huge price downswing. As far as the whales go, it's probably still pretty early on, but we can just take a quick peek at what the 100K to 10 million addresses are doing. And it does look like they're increasing. They hold a very small amount of the supply. So it looks like this is a pretty centralized token still, where 94% of all coins are held by 10 million plus addresses. So that's, we're talking about $22.1 million and above here on this red line. They own 94% plus of the token. So this doesn't mean they're dumping. It means they're kind of still distributing out to smaller addresses. So like if we look at, the 10,000 and 1,000, almost all of these are going to be going up because they're still gaining coins in their addresses from the distribution happening from this red line. But it's going to be dicey for a while, considering the 10 million plus addresses own such a high ratio of the overall supply. If they decide to make a big accumulation or a big dump, the price will easily go where this red line wants it to go. Doesn't mean it's a good or bad thing. It just means be on high alert for whale moves for this asset in particular. Exchange flow balance, mostly neutral, mostly coins moving off exchanges as of late. Network realized profit loss is dormant. Social volume and dominance is dormant. We're seeing a slight rise. I don't know if there's a fundamental event going on for IMX right now, but we do see a mid-sized increase over the last week or so for such a new asset. The fact that it's talked about 0.25% of the time is actually higher than I would suspect. So it is getting some talk around the water cooler right now. Age consumed, almost nothing there. Ratio of on-chain transaction volume and profit to loss. So let me switch this to filled area. Oh, sorry, I'll actually go to my template. Switch this once again. All right, so we're seeing another spike up in the ratio right now, indicating there's a little bit of profit taking compared to selling at a loss. Makes sense. It's been up since March 18th, so most of the last 3 weeks, people are going to be more in profit than at a loss. We did see a spike here, but a native spike here, but it didn't really do much. I would be a little more weary than optimistic based on this, because of the fact that there have been so many high spikes in profit taking, but not a lot in the capitulation side of things.
Just to add on top, I'm just looking now at this chat. Ideal sequence, if anyone wants to enter the market, would be now strong decline of the same metric. I'm thinking about how typically majority of participants would feel. If now they're taking profit, it means they're kind of feeling urged or convinced I have to do it. Market will keep going down. So it's already a good sign. And if it's kind of confirmed, at second time sharp drop, it means they're really concerned. And you can see it was what happened in 16th of February was similar. It was going up. You see between 15th of February and 26th of February, if I'm not mistaken, or 28th, it was increasing. Yeah, for whatever reason, people have accumulated profits, have been taking it, so they got concerned. And then it went strongly down. And after this, the bottom was built. Yeah. Keep in mind, it was a similar pattern just 3 weeks before. It did not work. So it's always, and it's a new indicator. But the way I'm reading it, you want to see increase. It means increasingly taking profits, which is good. And then they feel real pain, so it goes down. I would, at the moment, as I understand this metric, as I said, it's a new one, I would be looking for this kind of setups, going up on a declining market and then going strongly down. So we've made the first part. If we make the second one, okay, maybe not so bad.
Gotcha. Thanks, Max. Yeah, I think it's interesting to see how there's like a gradual increase up like this when a price is rising, indicating people are taking profit on the way up. Overall, my early learnings about this metric is that as long as the dominant trend is high spikes, profit taking, there at least needs to be something like this, like one or two of them to start coming in droves to balance out all of the profit taking to show that the capitulation is happening. So even if people are fearful here and they're taking a lot of profit, we really want to see that they're having fear as prices are declining or while they're already in the red as a sign that, a bounce can occur. But yeah, I still agree with Maxim's point. It's I love this metric. I really think we are going to use it more and more as time goes on. Now let's look at whale transactions really quick. Okay, we have a little bit of something going on here. So in the last month, we had the highest spike occur, what do you know, right at the local top on April 2nd. There aren't going to be many whale transactions for such a small asset. So this spike was 17 total transactions above $100,000. But you can see what happened on the three largest. Whale transactions are very much dominating the price charts right now. Every time there's a big spike, even just 13 here, and this should be 13 as well, prices declined right afterwards. And then we saw this one actually occurred right before a big price rise, and this was preemptively. Was this the actual all-time? No way. Sorry, it's not the all-time high. But regardless, it was. It propelled things upward, which is typical when things are in a flatter range like this, and then you see a whale transaction. That's a sign that prices are actually moving up and they're accumulating rather than dumping. Overall, it does look like we're seeing a little bit of a spike over the last few days. We've seen 5 occur for each of the last, just in the last day, we've seen 5 occur over the last few hours. But yeah, I think we really just want to look for these huge spikes as top signals. And then if things continue to decline, like if we saw a huge massive spike like this, like 15 or more, that would be a sign that they're going to be accumulating because this is happening on the way down right now. So hopefully you guys are starting to pick up what we're picking up on how whale transaction count can be used most effectively. It's really going to stamp when a price direction is about to occur when you see these big spikes, especially for small assets. So as IMX grows, you know, these spikes might be more like 100 whale transactions instead of 17, and then we'll really be in business and get some great alpha from it. All right, guys. I think we've hit the markets pretty substantially here. I hope we got to answer most of your questions. If you have further clarifications on any of the metrics here or other assets you'd like a little bit of a tip on, we're more than happy to send some charts your way on Discord. Make sure to use your referral links in your avatar page where you can actually, you know, share charts on Santiment, put your link at the end. If someone signs up and becomes a pro member, you keep 30% of that membership sign up. We'd like to give back. We'd like to make sure this is a rewarding process for helping to grow Santiment. And yeah, I appreciate everyone for jumping on today, and I'm wishing you all a very happy weekend. Max, anything else you'd like to say on your end? Max has left the building.
No, I just came back. Sorry, I
okay,
picked up
no worries.
What's the question?
Just wondering if you had any final words for the audience before we part ways for the weekend.
Oh, the final words, two. I mean, two messages. One, while we're analyzing and show things here, the main, I believe, important point is to explain, talk about behavior analysis. This kind of analysis we're doing. Behind all the metrics, we always try to read what it could mean, where the market and their participants are. And it's by no means a simple task, but it's highly rewarded. The moment we can understand, be it for specific token, for the whole market, what the majority of participants are feeling and why they act in a specific way, we can act confidently. And if you wish, we want some leverage. And this is an interesting ongoing research we are doing all together. So it's one message, and it's the main purpose. I personally want people join us and talk with us. And the second, for the market, there is one big topic which is not fulfilled yet, which is inflation becoming more and more our daily reality. And it's a long time since we had last time so high reflection in inflation in the Western world. Most of us didn't experience it. It was 90, 70 something. So I wonder what will happen once it become our daily reality and we realize how bad things actually are. And the central banks start acting, not just talking a little bit here and there, but they really start addressing it. So this is, I hope, where the Bitcoin will shine. Not only Bitcoin, quite some others cryptocurrencies. We might be going through difficult parts before that, but I still keep my belief the crypto will shine eventually, and we'll lose our connection with stock markets and being seen just another financial asset. Should not. We should become as a hedge against inflation and all this difficult parts connected to inflation. So these two messages. We are doing behavior analysis, and I do believe it's a good time for cryptos coming. And I never personally do any price predictions, and I always it's interesting to see how confident people say it will be 100,000, 1 million. If it would be so confidently, it will be already there. It's always in the market. If price of something has to be for whatever reason there, it will be there, right now. And if it's not there are reasons for this. So always let us always stay in the present moment. Yeah, and present moment. In the present moment, I think the inflation hedge, which crypto should provide, is not fulfilled yet. Okay.
Yeah, and you mentioned the correlation on the S&P. Thanks for reminding me. We didn't show that chart, but especially Ethereum right now, Max. I mean, it's so tightly correlated to the S&P, even more so than Bitcoin. I find that really fascinating.
Unbelievable, very strong. We should lose the spec or correlation eventually.
Yeah, exactly. We found in backtests that's when crypto thrives the most, when it's not a negative correlation, not a positive correlation, just no correlation to the S&P 500. That's when those bull runs really kick off.
Yep.
So anyways, thank you, everybody. Really appreciate the time. Hope this was helpful. Looking forward to many great conversations in the future and wishing you all a safe and warm weekend. Talk to y'all soon.
Stay safe. Thanks, Brian.